China imposing retaliatory tariffs right now on the United States, hitting billions of dollars worth of goods and energy resources.
How concerned are you about this inflation and just how persistent it is?
I'm so concerned about it, which is, I think, a message I've been delivering for a period of time.
I think that the outlook is simply too uncertain from a government policy perspective.
Gold is all the rage lately as its performance just keeps going. A record high yesterday, although it's taking a bit of a breather today. We're nearly $3,000 an ounce.
In times of uncertainty, high inflation, fear and doubt, investors tend to rush to safe havens. And let's face it, the equity market isn't exactly a safe haven right now. With geopolitical tensions rising, inflation still lingering and a potential tariff war on the horizon, one asset class stands out as a timeless protector of wealth. That is precious metals. Today we're diving into why gold, silver and other precious metals should be a key part of your portfolio right now and how they could save you from the volatility ahead. Before we start, I just wanted to say that the first video I uploaded last week on this channel got over 200 views, which I was not expecting at all. I really want to grow this channel and create a lot of value for the viewers, so if you like these videos then please hit the subscribe button and like the video, as it really does make a massive difference. Anyways, let's get on with the video. After the 2008 financial crisis, gold and silver prices surged as investors fled risky assets. Similarly, in 2020, when the pandemic hit, gold reached all-time highs as central banks pumped trillions into the economy, devaluing currencies. This article from Funds Europe states, in many ways, the pandemic drove gold to new heights as it put the asset class front and center of investors' minds as they sought refuge from the financial fallout. As such, investors flocked to gold-backed ETFs in 2020, with a record 877 tons added to global holdings, the equivalent to $48 billion. Right now, we're seeing similar conditions. Inflation is still above pre-pandemic averages. Central banks have been loosening their monetary policy since September 2024, but rates are still at 4.5%. And the broad investor outlook seems that there will only be one or two 50 or 25 basis point rate cuts for 2025. And on top of that, geopolitical tensions are at a high and still rising. All of these factors create the perfect storm for precious metals to shine. UBS has also recently revised its gold price forecast for the year higher, with a peak expected in the latter half of 2025 and a potential high upward of $3,200. And of course, not to mention that precious metals like gold and silver have been a store of value for thousands of years. Unlike paper currency, which can be printed endlessly, metals are a finite resource. This scarcity gives them intrinsic value, especially during times of economic instability. The price of gold and silver is largely determined by supply and demand in the international market. In countries like China and India, owning physical metals is deeply rooted in culture. For instance, during the wedding seasons in those countries, demand for gold jewelry spikes, creating seasonal price increases. But it's not just individuals driving demand. Central banks around the world have been stockpiling gold at record levels. In 2024 alone, central banks purchased 1,045 tons of gold, making it the third year in a row that central banks have purchased over 1,000 tons. Why? Because they're hedging against economic uncertainty and the devaluation of fiat currencies. For investors like us, this global demand creates a unique opportunity. As international demand grows, it supports higher prices, making precious metals a smart hedge against inflation and currency devaluation. With the new Trump administration and a tariff war on the horizon, the commodity market could see a significant movement. Tariffs and trade wars often lead to higher inflation and economic uncertainty, which historically benefits precious metals. During Trump's first term, gold prices rose from $1,200 to a high of $2,070 as trade tensions with China escalated. If we see a repeat of this scenario, gold and silver could once again become the go-to assets for investors looking to protect their wealth. Now, let's be honest, the stock market is overvalued right now. The S&P 500 is trading at historically high price-to-earnings ratios, and the so-called Magnificent 7 tech stocks are propped up by retail investor enthusiasm. But as we've seen time and time again, what goes up must come down. Precious metals, on the other hand, are a non-correlated asset. This means they often move independently of stocks and bonds, providing diversification and reducing overall portfolio risk. In a market crash, gold and silver can act as a financial insurance policy, preserving your wealth when other assets plummet. While gold often gets all the attention, silver shouldn't be overlooked. Silver is not only a precious metal, but also an industrial metal, used in everything from solar panels to electronics. This dual demand makes silver particularly interesting. During periods of economic growth, industrial demand can drive silver prices higher, and during times of crisis, it acts as a safe haven, just like gold. Right now, silver is trading at a historically low ratio compared to gold, making it an attractive entry point for investors. Long story short, precious metals are a timeless hedge against uncertainty, inflation, and market volatility. If you're looking to protect your wealth, now is the time to consider adding gold and/or silver to your investments. If you found this video helpful, don't forget to like and subscribe and hit the notification bell so you don't miss future updates. And let me know in the comments if you're investing in precious metals right now and what your strategy is. Thanks for watching, and I'll see you in the next video.